Welcome, and thanks for joining me today on Mortgage Manager Playbook, a podcast for sales leaders who want to improve their team's sales performance and originate more loans. I'm Pat Sherlock, your host. Today we're going to do a deeper dive, again, on the same topic of the National Association of Realtors settlement and its impact on the mortgage banking world. And I have my friend, a longtime friend, smartest guy in mortgage lending, and that's Brian Koss. Brian is Regional Director for Movement Mortgage. He's been with Mortgage Network and Countrywide and many other successful lenders with us. Hey, Brian.
Hi, Pat. How are you?
I'm doing great. And this is an important topic that I'm doing a series on and talking to the smartest people I know in mortgage banking. And I want to hear your thoughts on it. And why don't we start with the big picture that this has been a long-term issue for the real estate agent world, but our world as mortgage lenders are tied together with them, and especially since our loan officer world does receive their leads from the buying agent. So how do you see this playing out in your view?
Well, a lot of the smart agents have been anticipating this, and it is also very much a state issue. So certain states and MLSs and realtor associations had been anticipating this and were heavily utilizing buyer agent agreements. So we have some test cases already out there as to how this would take effect. And some of the examples of states where it has, they adapted quite well to it, and they were able to mostly work it in as a seller concession that 90% of the time. Even in situations where we've had very low inventory and it's been in essence a seller's market, sellers have still been willing to negotiate and put it in. So that's been a good sign.
So what states are you talking? Has this been primarily, is it a handful of states, or maybe if you could elaborate on that?
I mean, different stages of buyer agreement, but actually
Right.
30 states have had buyer agreements in place.
Oh,
What a good example was a change about a year plus ago in the state of Washington. They went to more of this model of requiring signed buyer agreements, and it's actually, in their case, they say it's 99% of the time the seller has been willing to just build it into a concession, and they're still getting, the seller's still paying it. It's just part of the overall negotiated terms
mhm.
of the deal.
So from that viewpoint, then let's talk about, I guess, the concern, and of course you saw some people talking about that this could be an opportunity for lenders to have loan officers actually as real estate agents, the dual representation. What are your thoughts on that?
I've never been a fan of it. This goes back to the concept of paying realtors for the business. I can remember in the mid '80s was Citigroup, right? Citi had
Sure.
Citi Power, and they put a terminal in a realtor's office. So this has been going on forever, and there's been a variety of places where they have tried this, and it hasn't worked because it's not a part-time business. And in the same way, we don't believe, I've seen lenders take the other side of it, saying I want the lenders to start getting licensed and getting a buyer side of that. So either way, I think you're having part-time people just getting, and it raises the cost, doesn't shrink the cost for the homeowner, and you don't have. But what I think the real answer to this is actually raising the level of professionalism and
Mhm.
eliminating people who've just had access through controlled MLS, and therefore, hey, I get to put the sign. You can't do a deal without me, and I'm going to get paid either way. And they never had a value add. So
Mhm.
the opportunity on the lender side and on the realtor side to truly define what your value is and why it's worth to work with you, and not just be the lowest terms out there.
Well, I agree with that one 100%. But this has been an industry, not just the mortgage side, but the real estate agent side, which has had a low hurdle to get into the
Mhm.
industry. And this
Yep.
has led to a lot of part-timers, which is not a good thing for sure. So, talk about, do you see this as an opportunity? And I thought, especially primarily with the buyer side, the buyer agent side, is that fundamentally they tout themselves as the negotiator. Do you see like legal firms, law firms getting involved with it? Do you see that this could be its almost specialty where people will in essence have that as the claim to fame of what they're offering versus this nebulous, yeah, you're offering XYZ, but really it all comes down to that you're going to negotiate with the buyer and the seller. What's your thoughts on that?
Well, it would have to be someone who's not already getting the majority of their business from realtors. So
True.
right away, there was some examples
Hmm.
of of attorneys or title companies who came out and it said exactly that.
Right.
Hey, here's my value prop. I'm going to do this.
Right.
The realtors basically dragged them out in the street and lynched them. Right? It was not pretty. And they said, we're not going to use you. We're going to cut you off. So they would have to be all in on that and give up their old network of business, which would be hard for many experienced people to do. So it would almost take an inexperienced person new to the industry, which
Hmm.
is a great value. Where's the value in that, right? So
Sure.
from a negotiation standpoint, and there are more things than negotiating, but that ability to make it a la carte, to
Hmm.
not just be all in, like it's you have to pay me 3% or nothing. I think that the ones who are going to adapt to that are going to have the best success, and they might do it in tandem. We see bigger there already was a movement towards teams, right? So
Right.
you had a broadening of team. The top really used to say the 80-20 rule is really the 90-10 rule in real estate, and I think it will concentrate even more. Those top 10% are going to get more of the business because they'll in essence be able to have negotiators, a buy side negotiators in there on an a la carte basis because they're going to get more listings and they'll be, hey, if I don't need the full 3%, if I can get 1.5% on this, that's just gravy to me because I was already going to get my sell side and I'll pay these agents who are expert at negotiating and representation and if they can really master that presentation, they'll be willing to work for all in of 4.5 instead of 6%. And because most people are heavily doing their own search online, using a Red,
Right.
right, using a Zillow, they already picked the house.
Hmm.
Now they want validation. I think that the NAR stat that comes out every year, they do the national buyer
Yeah.
survey, and it's always it keeps reiterating it's actually people our age who are less likely to use a realtor, but these young folks that you would have thought would want to do everything online, when it comes down to that final decision of
Right.
buying a property, they want someone who looks like their mother. They want something like I want someone who's experienced. Who am I going to go to? Because I've never done this before. And so they actually show higher and actually have
Hmm.
been increasing in the last years for saying, I want a realtor. But
Right.
what is a true realtor and what does that really mean? It gives us a chance to redefine that, not just
Mhm.
the MLS control and access.
Now, that's a really good point. So, what did you think when Fannie and Freddie came out with their little announcement of their view of it? Were you surprised that they took this stand
No,
or no?
no, that was the unintended consequence. Ironically, and this is where I think DOJ is missing this, the whole presentation from the administration that this is going to save money for people. We saw just the opposite, that it was going to potentially cause problems for the people who could afford it the least. So
Hmm.
the low down payment loans, which are less attractive to a seller because there's been
Sure.
many markets that are multiple offer. They've been struggling getting their offers accepted especially if it's government financing,
Hmm.
and they were in a situation where they were not able to be able to negotiate. So we're getting high price. If we were going to have to add that money in as a true cost, then if Fannie didn't come out and say this otherwise, you would have had high cost loans right
Right.
and left, not be able to do the financing. So it would have killed a lot of deals for low down payment borrowers.
Hmm.
not the high end guys. And it was going to be the
Right.
low, and those are people who this is supposed to, this whole regulation is supposed to be helping drive their costs down. It was going to actually hurt them the most.
So I agree with what you're saying, and they had no choice actually to come
Right.
out with something like that. I agree
Had
with
to,
that.
had to.
So talk about, obviously our business, the mortgage lending world, the buyer side is typically who the loan officer is
Mhm.
dealing with, and so now that can be hopefully a better professional. But what impact do you think that will have?
We see it, I mean, just as a more efficient market, because we do think that similar to lenders, I mean, we're going to have probably what 70% of lenders from 2021 will be out of business by the end of this year, meaning the licensed loan officers will be gone. The realtors have been lagging that. They've been dropping as well, but to actually shrink it down so that the real, because you call on realtors, and if you really don't do your homework, you're dealing with the average, realtor is doing three deals a year maximum of their
Hmm.
average, which means there's half of them are doing less.
Right.
So, and you're collecting realtors like you think that's, you're going to get business from them when they're really not. They're just doing their families and friends. They're not really
Hmm.
actively professionals. They're just,
Hmm.
doing friends in the business kind of thing. So this was going to force more professional loan officers, but on calling on the smaller world of realtors that you're going to have a greater success chance of them actually giving you a referral. Plus, they really control the buyer. If you We see a lot of realtors, it's still the whole three-card Monty, right? I gave out three cards. I can't control the transaction. They aren't really in control of the borrower from the beginning. The ones it's going to force the best buyer agents who are going to succeed in this new world, if they're getting someone to sign a contract that says, I'm going to have to pay you 3%, then that means I've really got this buyer under, and I have they're willing to sign that and willing on paper to pay me. Then they're going to do what I tell them. That means you're going to work with my title company, my lender, because I'm a professional. And if you work with me and you're willing to
Right.
pay,
Hmm.
we're going to get much more control, a higher pull through, again, a much higher level of professionalism. Because if you don't perform, that buyer agent will fire tomorrow. We all know that. But I think that our biggest pain has been you spend all this time with someone for a year sometimes, and then they go somewhere else, and the agent's like, oh, I can't control them. You
Right.
will control them as a buyer agent going forward.
So do you think that this, when it gets down to the loan officer role, that it also lends itself to making somewhat more of an effort on going direct to the buyer themselves and flowing business into the buyer agent, certainly as almost more of a partnership? You certainly see loan officers doing that today, but not as much, obviously, the good ones do.
Right.
So what is your thoughts on that? It just seems as if who gets the buyer first really is going to matter.
Yeah, I see it as twofold. One is the typical, well, don't call on listing agents. They can't control the transaction. Because I think that the top listing agents will have buyer agents wanting to work with them. They're just going to say,
Right.
I'm going to work under you because you control X amount of listings in this town. So
Hmm.
you're going to calling on listing agents, which we've always believed in. I've always believed in,
Sure.
especially in the kind of markets we've been in with a seller market. Many of these, especially on the East Coast for the last multiple
Hmm.
years now, they can control the transaction. It's all how you present it, but
Hmm.
that's going to be a difference. And
Hmm.
then the other part that goes with that is that database marketing. We've always believed in the annual review process and
Hmm.
owning the clients. And now you're going to have, we just talked about 70% of lenders being out of business from 2021 of all those loan officers. Well, who's looking out for their clients? So now you have
Right.
this whole world of mortgage orphans that no one is managing their debt. The professionals that are left should step in and adopt mortgage orphans every week, create a large database, have a system because now you have the triggered lead information. You know when this guy's pulling his credit, is looking online at Zillow, maybe he's risk of selling his home. You're encouraging those top agents who have a good sized farm of data who they don't, for the most part, they don't do CRM on their own database. They don't market their past customers to put them into your database and for you to then market and do a better job, like a Trojan horse, going into that realtor's book of business, staying on top of them, looking for them to maybe, buy, they're buying a second home in Florida, get that agent a referral fee,
Right.
right? Working off, and then how you trade back to them. Hey, I am finding this guy might move and his realtor's not in the business anymore. They don't send me any business, so I'll send them back to you.
Right.
To your point, how do you, some people are saying, I want to become a buyer's agent. Said that don't do that. Take the goodwill that you're creating, give it back to that agent, and then the law of reciprocity, you should be giving me back to, I know how much that pays you in commission, a lot more than it pays me as a loan officer. I want 2 deals back that, to trade for that. So that's where I think the value is, to your point, is consumer direct, but not the old school refi consumer.
Right.
It's relationship, maximizing relationships.
Well, you're on one of my favorite topics, as you well know, but when you look at the loan officer, it's almost like the model has been built upon, once it closes, I'm out of here. And then the CRM is actually an impersonal reach out. What you're talking about is personal reach out. Do you think loan officers get that?
Oh, Pat, it's making progress. I mean, the funny part about now is, you always counted on rates coming back. And, I think Bill Hart said the other day, no one's coming to save you.
Right.
Right. So you can't count on the tide coming back in. It's the end of the 30-year bond bull market. So a lot of the conversations we're having with loan officers is, well, what will I say? Like, because they're like, I'm going to call them like, but your rate, you have a rate at 3, the rates are at 7. What am I saying? So there's a lot of scripting around being a financial professional, a debt manager, because we're seeing consumer debt is going up quite a bit, right? Because it's huge changes in credit card debt and then in car loan debt and being, bound. So showing people here's your blended household interest rate. So we're refinancing people from 3 to 7 and saving them $1,500 a month because of what they're paying in their other debt, right? Their home equity lines, 8%. So all of that together, those conversations, people are kind of embarrassed about it. They don't know, what to say, and those types of conversations, especially with their tax manager, their CPA, and legal manager, and trust, and talk all that with their asset people as well. What is the smart way to manage your debt? Because home equity has never been higher. So we're having equity management conversations. So less about talking about mortgages, more about your equity is the bigger part of your wealth than it ever was projected to be. It's too big a piece of the pie chart. How do we leverage that correctly? Let's look at your average blended rate. So it's new conversations. It's hard but a lot of our veterans who have a big database and aren't calling the same way on realtors they used to. I just talked to someone this morning. She was like, I'm in my 60s. I'm not going out for drinks and schmoozing with realtors the way I used to, but I have this book of business. Like, well, we have opportunities here to have these types of conversations, and work this. So that's what we're trying to do. We teach them now, but honestly, it's a minority. There's plenty of opportunity for lenders to do this, and because their average peer is not going to.
Well, so this leads to my other favorite topic, which is it does lend itself, just like the realtor world has to become more professional. And I'm involved with teaching them what to say. So I see this every day. We need more professional loan officers. I mean, that's what it lends itself to, is that what we consider adequate is really not working in this world. I had another interview that I did just the other day, and we talked about artificial intelligence, and he made the forecast that the dramatics is not just on the ops side, but on the sales side. And do we have actually the right people? And so we have so much technology that doesn't get used. I know that's a lot of thoughts contained in what I'm talking about, but what it does lend itself to, we need likewise to take the responsibility of developing these people, that if they're going to have these interactions, they have to be certainly better.
It's funny, the teeing up the data, it's all about data, right? I mean, the most valuable companies in the world are those who manage data today, right? And how so much of this, because you have this shrinking, like we said, there's less and less lenders, and this pool but debt's never been higher, right? So all of this is ready to be managed. that we see, because we're building it in our world. We have a sharp tech person who is building a Salesforce platform that is using, so you have a dashboard that's telling you, here's your client base and here's your servicing the database, and it's running those models, saying like, this is a potential for a reverse company. This guy's, we know his age, we know his equity, we know his debt. Maybe so it's teeing up that question. I said, where a lot of my experienced loan officers say, I always call them, hey, rates are down, let's refi. And that was all I ever did, right? Well, what am I going to say? Well, look at your dashboard. It's saying look, he just got a big equity line and he's had it for a period of time. Prime is at 8, boom, right? That's a conversation. Reverse potential. Looks like he's looking at homes on Zillow. That's potential. That's all AI, basically, right? So artificial intelligence looking at the data. Here's what we know about the customer. It still needs a human conversation.
Right.
And the CRM system, the drip system, I always called it, it's carpet bombing. But you don't win the war with carpet bombing. It's then you have to go in and have hand-to-hand combat after. The carpet bombing just warms them up and keeps you top of mind. But you have to go in and then make the call. Right. You know that, hey, you just sent them a note on their birthday. Well, then you're supposed to call as well. Right.
Right.
But just in case you're too busy, it makes sure it gets done, but it's not personal. But it reminds you, hey, you should call them right now. Right. And that's why we actually would build in my old company. We built in an annual review. So it took your date and said, hey, it's our anniversary. Right.
Right.
It means no one else except you and me that you and I did a loan a year ago. And I want to talk about you, what's going on in your life. And if they didn't answer, then you use video to reach out to them and send them a face message that says, hey, I went online, I saw your kid, congratulations, your kid's getting into Harvard. How you planning on paying for it? It's a connection, but it doesn't take long because that data is there at your fingertips, but you have to be present and focused to make those outbound calls.
And so what percentage of loan officers would you say would actually even, I guess, ponder doing that and utilizing it? I mean, I obviously think what you're saying is completely right. And therefore, it does lend itself to make sure that the development of the personnel side isn't just left up to them, because it's now you have to access into data, which is always a saga. And then actually you have to now have the relationship skills, the soft skills to obviously continue having a connection. I mean, so when you really look at the present setup, it does lend itself similar to the real estate agent world, that there'll be a lot less real estate agents because the new world requires a whole different skill set. What are your thoughts on that?
Yeah, I'd say the reality is 70% of people acknowledge that it's a good idea and have said they're going to do it. I'd say then 35% of them start to do it, and then only 10 to 15% actually master it and make it part of their habits and do it.
I agree with you 100%. Brian, that's why you're so smart guy. Because that's what I see. And so to me, as a sales leader, then to me, what the game is to constantly find that 10%. And they may not currently be in our industry.
Yes, I would. Because it's a new approach.
Right.
And we have had, it's been fun. My old company, we had a smaller company, and we attracted a lot of veterans and a lot of people who were been in business for a long time. Movement is a very young company. It's been funny to work with so many young people who have a new, fresh view. And I see all these really young people who are doing really good, having some success, not and really good success, and they aren't been in it that long. But to your point, they didn't have any baggage. They didn't have any overhang of, they never were around for the big refi booms, and they didn't have much of a book in 2021 to refi, so they were still doing purchases. So people with 4 or 5 years of business are learning a new way, and it's almost a burden to be experienced, because you just have, geez, this is so much harder, right? Relative to what? Not digging a ditch. This is pretty easy compared to that. Like all you have to do is make these calls and follow up on them, and just do what you say you're going to do. It's not that hard.
It's not that hard. I agree with you. So we only have a few minutes left. Kind of share your thoughts on how you see this playing out with the NARN settlement and its impact on mortgage banking.
There will be some firms who are going to take a gamble and try and get into start hiring realtors, and or having their mortgage people be licensed. So I'd say maybe 20% of firms might go that direction. It's firms like the better.com and people like that who are already, not what I'd say your typical lending platforms. There'll be some shifts that way. That will be interesting. Then I do see, again, a big shrinkage on the real estate side, and it will actually could force more partnerships. I could see some teams where they're actually putting a mortgage person, your top listing agent, who's just huge, right? Huge volume that they control, putting a buyer agent in there who's also a mortgage person, sort of like the joint ventures that one of those went out of business because they're not making any profit the last whatever years, right? It could come back in forms like that. I could see JVs forming along the top, whoever has the top listings, and trying to control that information. But no, I think it's all good. I see it as a good thinning out of the realtor group and more. The top will do more, and only the best, and they'll want to partner with the best loan officers. So it will continue shrinking on both sides of the industry for this. And some states are lagging this more than others.
Well, I agree with you 100%. And I'm thrilled to speak to you this morning because all that you said is really important. And I want to thank you for sharing it. And I want to thank our listeners today. To subscribe and receive notifications of the latest podcast, go to patsherlock.com. Thanks again, Brian.
My pleasure. Thanks, Pat. Good to talk to you.
Thanks for listening to Mortgage Manager Playbook. You can catch up on all our episodes by subscribing to receive each week a new show. Don't forget to share this podcast with your friends and team members. If you're looking to increase production, call me to discuss my prospecting sales training program, Ramping Up Realtor Referral Sources. Check out my website, www.patsherlock.com.